Hello everybody, what's going on? So few big insights are coming from Sofi's end, and I believe after this game is completely going to be changed. I have got one presentation ready for you. Let's watch it together.
What if the most powerful man in the world just revealed his secret stake in the future of banking? And what if I told you that while the retail crowd was sleeping, institutional smart money was quietly loading up on over $100 million worth of shares in a single after-hours session? Welcome back. Yesterday was, quite frankly, one of the most electric days we have seen for SoFi in a very long time. While the broader market has been shrugging its shoulders at this company for months, ignoring stellar earnings and CEO Anthony Noto's repeated insider buys, something shifted yesterday that changed the entire narrative. We finally saw true signs of life. The stock surged over 4.6%, hitting highs of $16.06, and it wasn't just a random spike. We saw massive volume, 67.8 million shares traded, proving that the big fish are back in the pond. But let's look at why yesterday felt different. The macro data actually started working in our favor. Retail sales came in slightly above forecast, and jobless claims were just a bit higher than expected. In the strange logic of the current market, that's exactly the kind of soft data that paves the way for a rate cut. And as we know, lower rates are the ultimate fuel for a growth engine like SoFi. Add to that the optimism coming out of the Chinese summit, where it looks like cross-border business is set to expand, and you have a perfect environment for financial tech to thrive. However, the real bombshell, the thing nobody had on their radar until yesterday, was the disclosure of Donald Trump's recent trades. It's rare to see a political figure's portfolio cause this much of a stir in real time, but a 113-page disclosure hit the desk, and right there on page 2, the name SoFi appeared. Whether he is day trading it or holding a core position, the signal is clear. SoFi has hit the radar of the ultimate high net worth circles. When the big money sees a name like that associated with a stock, they don't just watch, they act. And act they did. Yesterday's after-hours tape was legendary. We saw a single transaction of $128.5 million. We saw a string of $8 million buys hitting the tape one after another. That is institutional accumulation at its finest. When you see BlackRock, Vanguard, or major hedge funds loading the boat at these levels, it tells you that the current price isn't just a bargain. It's an inefficiency that they are rushing to exploit. Now, I know what you're thinking. If it's so good, why are the shorts still there? Yesterday, the shorts actually doubled down, increasing their position to over 13% of the free float. They are calling BS on this move. But here's the reality. They are playing a dangerous game. Sofi just closed above its 10-day moving average. If we can hold this momentum for just one more session, history shows us that a push toward the 50-day moving average often triggers a massive 30% swing. We are looking at a potential gamma squeeze if we can pierce through the $17 level, which would force those shorts to cover and send this stock into orbit. The stochastic RSI is finally breaking out of oversold territory. The volume is screaming accumulation. We have the CEO buying, we have political heavyweights involved, and we have $128 million blocks moving after the bells. The slap in the face that SoFi needed to wake up happened yesterday. I truly believe we are standing at the threshold of a major re-rating. For those who have stayed patient while the market ignored the fundamentals, your conviction is finally being validated. The stars are aligning. Macro, technical, and the whale activity are all pointing to the same conclusion. This isn't just a bounce, it's a breakout. Even with all that institutional movement, there is a technical battleground forming that most people are completely overlooking. If you look at the options chain from yesterday, the tug of war is intense. We have over 22 million in call premiums versus 15 million in puts. That tells us that while the bulls are gaining the upper hand, there is still a massive amount of hedging happening behind the scenes. This level of activity usually precedes a volatility explosion, and given the direction of the big money buys, that explosion is heavily skewed to the upside. Let's talk about the dark pools for a second, because that's where the real story is often hidden. Yesterday's dark pool data showed a consistent trickle of buy orders, not just the massive blocks we saw on the lit exchanges, but a steady stream of whole number trades. This is the classic signature of hedge funds using algorithmic accumulation to build a position without alerting the retail crowd. They want to get in before the $16.50 resistance level truly breaks, because once we clear that pivot, the next stop is $17, and then the door to $20 swings wide open. What's even more fascinating is the psychological shift we're seeing. For months, SoFi was treated like just another struggling fintech. But look at the narrative now. When you combine the potential for a Trump effect catalyst with Anthony Noto's relentless insider buying, you're no longer looking at a speculative play. You're looking at a prestige stock. The market is finally starting to realize that SoFi isn't just a bank. It's a technology ecosystem that is effectively capturing the most profitable demographic in the country. I want you to really process the magnitude of that $128 million after-hours transaction. That wasn't a retail trader buying the dip. That was a deliberate, calculated entry by an entity that expects a massive return on capital. They are betting that the shorts, who are currently sitting on 165 million shares of short interest, are wrong. And when 13% of a float is shorted, while institutional whales are buying nine-figure blocks, you have the perfect recipe for a short squeeze that could move the needle by 20 or 30% in a matter of days. We also have to consider the gamma situation. With yesterday's price action, we saw a massive clustering of open interest at the $16 and $16.50 strikes. If the stock holds these levels, market makers are forced to buy shares to hedge their positions, creating a feedback loop of buying pressure. This is exactly how we see those parabolic moves that leave people wondering, how did I miss this? The bottom line is this. The window of opportunity where SoFi trades at these suppressed multiples is slamming shut. Yesterday was the signal. The volume, the technical breakout above the 10-day moving average, and the sheer force of institutional capital entering the fray all suggest that the shrugging of shoulders phase is over. We are moving into the realization phase, and that is where the most money is made. So, stay focused. Don't let the daily noise or the short seller's narrative distract you from what the tape is actually telling us. The big money has made its move. The technicals have turned green. And for the first time in a long time, everything is aligned for SoFi to reclaim its status as a growth leader. This is the moment we've been waiting for, and yesterday was just the beginning of a very profitable new chapter. Keep that conviction strong. We are just getting started.
Okay, you heard it, guys. I completely agree with this report. Now, SoFi is a prestige stock, and I believe from here, the real bull run will begin. Because of the Donald Trump name, we are going to see other big companies also jumping in into this stock, and because of that, we will see some good momentum. So get ready for it. With that said, thank you so much for being here. See you in the next one.